Welcome to Things Invest. We talk about investing, finance, and professional development. It's the current time of 10:29 a.m. on the Eastern Time on Sunday, December 4th. Hope you guys have a good week, good weekend, and sorry for missing the whole entire week. For not catching up with you guys. I've been traveling to Miami for Art Basel, and my schedule has been just extremely hectic. Been back to back to back to back. Despite the same time zone in comparisons to New York, obviously Miami and New York have the same time. My body was for some reason trying to adjust. And if you take a look at my schedule from last week, I can just like share with you guys. This was my calendar last week. And obviously, I'm glad that this passed by. But it was definitely a very interesting course of events. Just to talk about it, my flight was actually slightly delayed in the morning. So I was sitting at the airport, at LaGuardia Airport, and something that I realized, I was taking the Spirit airline, which I thought was like, it's cheap, right? It's like much lower than flying Delta or American Airline by like 25%. But I realized that you have to pay for your carry-on. So next thing you know, I have to pay like $99 for just one carriage, one luggage that was carrying. So that's a lesson that I learned. If you fly Frontier, if you fly Spirit airline in the future, um, probably not do so. On top of the fact that there's no TV, but I was like doing work on the plane, but the Wi-Fi was not working either. So it's definitely not the best experience. But then on the Tuesday, I went to like a Rockefeller, like the Rockefeller family art show, which was quite interesting. I went to a Stone Island, like the clothing brand. They did like a concert alongside Jamie Foxx that night. There was like a Giorgio Armani concert, and then I somehow somewhere I met up with Pharrell Williams, the famous musician, which was great. I got to catch up with him a little bit, and then the day after I was did a bunch of other events, which was quite crazy. Just a bunch of collections of house parties to things like that. But I was obviously not there for just the sake of just partying, which I don't do partying, as you probably know. I do mostly just networking and try to find connective tissues with people that are investors or startup founders that are looking, to support or collaborate in some sort. And then eventually, we went to more events, just like me tagging with other friends that was also part of the journey that was with me. But like with respect to the entire trip, it was definitely productive. I met with a ton of people, I think over 25 people that are meaningful. Obviously, I was like, just talking nonstop and meeting nonstop, despite I was like going partying, but like it was not really just partying for the sake of partying, if you get my drift, right? And then with respect to the market front, this week was a pretty interesting one, right? We saw some sort of anticipatory pressure heading on to the Friday job report, which came out to be quite hot, right? If you take a look at it. So it's basically like the run up, the anticipatory pressure, that rally up to the Friday. And as the report comes out, you get this relief effects, but almost, more like just normalization effect from the whole market front. And we could take a look at the report on a high level synopsis, right? CNBC was very kind to give us the high level notes right here. And you can see that I'm not wearing my glasses today because I am wearing contacts. It's probably better for my sanity. I've been I don't really like to wear glasses anymore. Like it's been weighting down my nose bridge and it caused me like a bruise here. Like on my nose bridge. And I feel like, it's probably better to be, have my face, how would you say, naked that way. But with respect to the key points, it seems like the higher than expected payroll numbers have been added to the delicate tightrope that the Feds have been trying to do. Obviously, we know that the job numbers is one of the key mandates that the Feds has, but now obviously fighting inflationary pressure is another key mandates that the Fed has. But seems like with respect to this rate hike, it is kind of mitigating, what has been, a sustainable interest rates that we've been, you know, using to counter the inflationary pressure that we've been having so far. So, despite this positive negative job report is again a historical depictions of what's happening, the main question that we need to really understand is that with respect to the inflation and the job numbers, how are these two needles triangulating with one another? Um, and as we're heading on to the CPI report that's coming out on the December 13 and 14, which is technically next week, if you really look at it. Like, we're 9 days away from now. And the 14th, we'll see how that goes, right? We'll also understand from the FOMC meeting, which will happen as well before the Christmas. And I do have a feeling that this rate hike will have a high probability that we won't be going to 75 basis point again. We'll probably go to 50 basis point. But obviously with this job numbers, having some sort of an impact. But I would say the impact has been minimal. I would say the real reason behind the normalization on Friday, and it was not a huge normalization or sell-off, it was just, because we had a rally throughout the week, a relatively good week on the equity side, and obviously propelling up the crypto side despite the, post-mortem effects from the FTX incident. And now you're seeing other investors and retail investors being kind of scurry and kind of more worried about the long-term outlooks, combined with the potential regulatory constraints that we'll be seeing going forward from the Feds, which I know is still working on because it's still a nascent technology, a lot of compliance and legal infrastructure that has not been fully baked in yet. So it is definitely dampened. But if you believe in this long term, I think buying around these dips are definitely very logical, right? But again, we need to really look out for the upcoming reports. And my gut feel is that it will be a positive one. It might be mitigated just in comparisons to historical performance, but the fund managers will have to be incentivized to want to propel the market upward for something that's called window dressing. So I wouldn't be surprised if that was the case, right? So let's take a look at the other news. Are there any other news that we should really take a look at? It seems like Celsius clients are having some sort of legal issues that's going on right now. Some other trivial news, it seems like Tesla investors is backing a company that's going to be delivering a $300,000 flying car by 2025. Interesting. And that's pretty much it overall. It seems like there's some issues with the airline companies. Delta pilots would get a 30% in pay increase under a new contract due to the fact that there's a shortage of airline pilots. And also, like, it's been quite rough, like, to try to balance out the demand or the relatively high demand. But these airline companies have been getting killed on their debt ratio front, knowing the fact that they've been technically not operating for the last 2 years because of the COVID situation. Not fully, but obviously you know what I mean, right? So let's just dive into technical with respect to recording time of 10:38 a.m. on the Eastern time on Sunday. Hope you guys have a good week so far, and apologies for not catching up with you guys earlier. I've just been relatively slammed, as you saw my schedule. And with respect to the technical front, we are clearly at the new platform, which is something we appreciate. We're at 1250. This is something that is very logical. It seems like we are forming a new resistance level, so that's great. The next level that we need to go up to will be somewhere around like 1310 based on the technical level. But right now we are doing something that is called the cup and handle. So that we're forming a cup. You can see that we're meeting right here clearly on the red line. Now we're normalizing halfway, right? Just to meet at a level that is more tolerable. And then as we form some consolidation, we will go back up from here, and that will allow for a bullish momentum to pick up. And you can see that with respect to the weekly, we are forming 1, 2, 3, 4 heads. And I would say it's showing some sort of fusing together, getting in close proximity now. So I think as we cross down just slightly, we will cross up eventually, and that will complete the cycle of the bearish trend that we've been sustaining. But eventually, on the monthly front, you see that we've been quite plateau for quite some time, and we are at the mid of transitioning. We're forming a plateau, and eventually it's going to take off from here. So that's something we appreciate. I do like the setup so far. Buying around these dips are very logical. And then on the Bitcoin front, we are up 1%. Same thing on the monthly. With respect to the weekly front, we have 1, 2, 3, 4 hits still, but it is looking quite mitigated. You could see that the apex has already been formed. We need to just kind of fuse together. So seeing some short-term normalization would not be a surprise for us. Maybe coming down back to 15,500, 16,000 would not be a surprise for us. On a daily, you could see that it's a little bit more extended in comparisons to the Ethereum momentum, which, I think right now is driving more bullishness, knowing the fact that we're still only at 40 out of 70. We still have some more room to run up to. And this looks like a very small downward wedge, and a downward wedge will triangulate into a pump. So it seems like we are slowly forming a new escalator upward, but it's still relatively preliminary for us to say. Okay. And then let's take a look at some other stuff that I also want to address. Maybe let's take a look at BlackRock and ARK Invest, see how they're doing before we wrap up for the day. It seems like us off Friday, which just ended this past week, it was a relatively good buy day, but normalized buy day. It's interesting that I locked this in at 11:11, so make a wish, guys. It was relatively more of a normalized day, nothing too heavily on a buy or sell, but BlackRock was clearly a relatively prominent buy day. So I mean, it was a dip, right, on on a Friday. So I think buying at the normalization level was definitely much more logical than buying on the opposite side of the spectrum. You definitely want to buy when panic is full on, and I think with the normalization basically countering the rally that we have had during the week was the right move, right? If you believe in the long term outlooks, and I mean, a lot of the stocks that we're still seeing right now are still relatively suppressed, down 70% from all-time high so far. So dollar cost averaging around these levels is definitely very logical. Very logical. It's the right move, right? Ultimately, you can never time the bottom, despite how the CPI, the PPI, and the FOMC meeting will look like going forward, right? So appreciate you. I will have to get going now. But thank you for joining me again. And sorry again for missing the whole week. I didn't mean to do that, but you guys are amazing. You guys are always with me, and it does mean a lot to me. And sorry for being a little bit long drag today. I'm still trying to catch up on my breath, and I slept in a little bit. I woke up at like 9:15 this morning, which is atypical. But anyways, have a good one. Take care. Bye.